most markets are more in favor of sellers, except for your really unaffordable markets, Ontario and BC. And Ontario is significantly looser than average. So that means market with more supply, leaning towards excess supply. BC would be in the same situation. If you want to kind of get an understanding for this sort of like directionally, you can just look at house prices across different markets: Vancouver, Calgary, Edmonton, Toronto, Ottawa, and Montreal. Vancouver is a market that I would call grinding down. You've seen a steep drop in prices, almost 10% year over year. And now we're in the slower 2 to 3% drop environment sustained over a period of time. Calgary is a market that I would call that has rolled over. So it's come over that high growth and is now dropped below zero. Calgary is actually now down about 1.8% on a year over year basis. And I'm going to go through which markets are winning and losing on a price growth basis across the country. Edmonton is a market that is rolling over. So you can see that Edmonton had this really big run up in price, and then it's starting to trend down towards that 0% line. The expectation would be Edmonton's a little tough because it is a really affordable market, but it does have a ton of supply. And we'll talk about that. I'm going to go through a rental supply scenario, which is important to look at. If you look at markets like Ottawa saw the big drop. It did grind down a little bit, but it seems to be stable above that 0% mark. And I would call that in a slow recovery. The asterisk that I have for the slow recovery for Ottawa is that Ottawa is very vulnerable to government layoffs.